Hey everybody, this is Jose Blasco here. We are about to start. We got 20 something seconds to go. Let's use this time for a sound check. I believe everything should be okay, but a quick message on the chat box confirming that you hear my voice would be great. That way I know we are ready to start. So please type a quick hello, and that would do, so we can start on time. Wonderful. Thank you so much. Bojan, good to see you, my friend. Very good. So 2 seconds to go. That's it. We just hit the top of the hour. It's therefore time to start. And I first want to go ahead and introduce the session properly with our introduction slide. Very good. How are you, Thui? How are you, Ruben? Good to see everybody. Very, very nice to have you join me live in the session. Also, hello for the ones of you watching this recorded. Certainly, it's also appreciated, even though I guess that based on your other responsibilities, you cannot make it live like some of the other attendees, okay? But certainly, we are here for you, okay? I'm just realizing I forgot to turn on the video feed, so let's turn it on. How are you, everybody? Good to see you. Today is February 5, 2020. My name is Jose Blasco. I will be guiding the session. I will be your guide. Today, I'm guiding you into the world of longer-term trading, and this means that we're going to be using options for our trades. We'll be exploiting the world of directional trading, as well as non-directional trading. We'll be looking at different market setups. There's been some activity out there in recent times, isn't it? We have the market move down pretty sharply, then move back up pretty sharply. Today the market is looking like it's going to open to the upside again. Many things going on the technical side as well as the fundamental side in the marketplace. Okay, so we're going to be looking at the markets, attempting to take advantage of all of this and more. But before we start, disclaimer, the following video clips demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of factual results. As a user, you understand and agree that hypothetical results obtained through a demonstration do not indicate in any way the results you may receive on using our products. And this is the disclaimer. Okay, so good. So now, here is TradeStation. You can see here, we got, as we started the session, we got the chart of the S&P. Notice that the market, the US market hasn't opened yet, okay? It's 9:02 morning hours in New York. So the market will open in 28 minutes from now. But notice that even overnight, okay, with the pre-market session, we can see the market is likely going to open up around 1% up. That is a pretty big move, given the fact that we had a very sharp drop. Okay, I mean, no surprise, there is a collection of UFOs. So from there, the market is bouncing strongly to the upside, and it's looking like we're going to be opening at 332.23, which is basically the extreme of that red UFO, meaning that almost all the sell-on field orders will be taken out. And therefore, we may have another movement to the upside, another continuation of the overall market trend in the larger time frames. Okay, we can see that as well when looking at the climate. Okay, we got 7 candles into a down climate where stats suggest it's going to be 5. So certainly this move down was, let's call it, exhausted, and those green UFOs help to reverse the climate. So today we're going to open with a blue climate. If you are managing your portfolio with multiple positions at the same time, certainly you're going to have to accommodate for these changes of climate in the marketplace with the right amount of deltas, either positive deltas, negative deltas, etc., etc. Okay. Mario, how are you? Good to see you. Pansy, good to see you. Edward, very nice to have you with us as well. Bojan, important month for you, isn't it? February is an important month. Yes, it is. Okay, good. So anyway, quick look at the VIX before we start looking at the specific market opportunities. Expect the VIX to be down today, given the fact that the market is moving up so sharply. Okay, so the VIX is going to up and down at negative 2.68%. But notice that we got plenty of on-field orders to buy here on the VIX with 67% probability of some sort of a reaction. So we could certainly see the VIX go back up. Okay, it's currently trading at the 15 level. We may get to see the VIX go back to, let's call it, the 18 level or something like that. That could imply the S&P falling, I'm not going to say hard, but falling in a vivid manner in the following days, after this push up, maybe a little bit of a correction, coming back to some sort of an average price. Okay, so we'll see all of this happening, and we will, as I said, react to it. So how do we react to it? Okay, how do we and when I say react, somehow I mean anticipate. Okay, but of course anticipate without a crystal ball. Anticipate like traders we do, which means that we pre-plan the trades, we use rules, we stack odds in our favor, and then we execute with risk management. So when we're right, we profit, and when we're wrong, we lose limited. Okay, so that's how we're gonna do it. So in any case, the way on how we're gonna be able to plan for all those trades is looking at our scanner. We got a collection of opportunities here. We'll start with the one that is highlighted in gray color, which is pure non-directional. That one is right in the middle. This is gonna be opportunities where we sell options, we collect the premium, and then we let time pass, and assuming the market will remain not directional, meaning it will either move up or down, but not too much, from now until the expiration date of those options, then the premium sold will be kept as a profit. And it's a very nice way on how to collect profits from the market. We could certainly do that combined with the directional trades that we have here on the top. So on the top, we got directional long, and then right below directional short. Okay, we can certainly exploit those opportunities. And then in the bottom part, we normally keep that as a plan B, which is the neutral long and neutral short trades, which are non-directional somehow, but because they have a bias in one direction, it's either we only use calls or only use puts, and because we only use one type of options, we get paid, let's say, half of the premium. Okay, this is an oversimplification, but you get my point. Meaning that it's not wrong to do that, but most of the cases it's juicier to work with pure non-directional trades, and normally we run iron condors. Okay, so I'm going to start with a list of potential iron condors. Okay, we got a collection of stocks. Actually, to be precise, we got 8. It's less than 8. Okay, because XLI is an ETF, so we'll pass on that one. IYR is an ETF, so we'll pass on that one. DIA is an ETF, we'll pass on that one. So in other words, out of 8, we ended up with 5 opportunities that we will be analyzing and see if they meet our rules. Okay. Also, one thing that I'm going to do, so I'm just going to click here on NVIDIA, and while it's loading, okay, the one thing I'm going to do immediately, okay, without even doubting, is get immediately in Yahoo Finance. Okay, and I'm going to type the symbol NVIDIA, NVDA, okay, to check earnings. Okay, why is it important for me to check earnings? Okay, notice it's going to be in a very romantic date, February 14. Okay, so we need to look at the calendar there, because today is February 5, the next Friday is 7, the one after is 14. So we cannot use 14 because 14 is going to be the day where the earnings for NVIDIA are taking place. In other words, you may have a gap even before the market opens on February 14. And if you were to be in an options trade at that moment in time, you may get in trouble, because remember, we are dealing with non-directional trades now. You don't want the stocks to move too much, and earnings normally create gaps, which is a lot of movement. Okay, it's the exact opposite of what we want. Okay, so in that sense, we cannot use the expiration date of February 14 because of the earning date, but we can certainly use February 7. Okay, and by the way, good practices imply to always be ready to use other sources of information. So you see, if I load NVIDIA, I got a E here in the bottom part. Okay, this implies that when you look at your settings on TradingView, okay, which by the way, not all of you may use TradingView, and if you don't, you should, okay, because it's free. So let me write it down here very quickly. So you can use our website, www.tradewithufos.com, okay, and then you add /TradingView. Okay, and if you do that, you're gonna come to a page where basically on the left you have a membership from TradingView. It's not our company, okay? It's TradingView, but there is a membership called Basic, okay, and that one is free. And therefore, you can now go ahead and do what I'm about to do, okay, which is very visual and very nice, okay? I mean, I got the UFOs there, and you can get the UFOs as well here, but let me turn them off, because that's not the point of this of this exercise. The point of this exercise is to show you that if you click on the settings, okay, the settings of TradingView, you can either activate or deactivate events, okay? In this case, you can show earnings on the chart, okay? And if I show earnings on the chart, basically that is gonna be the E that we get to see here on the bottom. That E right there, where if I click on it, it's gonna give me information and it's telling me when the earnings are expected to be, which is February 14. So again, if you are looking at earnings dates within your trading platform, TradeStation does not provide that, but maybe you're using TD Ameritrade, maybe you're using Tastyworks, or other platforms that do provide that information. So then normally you are good to go. But when we use free websites such as Yahoo Finance, normally is okay. Normally is okay, but there are a few cases where it's not okay. And it's always good to have a second way to double check that your earnings are correct if you're using a free source of information. In this case, both Yahoo Finance and TradingView are free sources of information. And that's why I'm pointing at those two sources, okay? Anyway, so what do we have with NVIDIA? So I'm just gonna load the 55-minute time frame. We have the earning dates to be on the 14th of February, and as we said, that's really not good for us to use February 14. Therefore, if any, we need to use February 7. If we use February 7, we cannot use options that are too far out from current price. Current price is 247. Actually, current price is 251. Okay, so 251 is somewhere here. Okay, it's almost a 2% up today for NVIDIA. Okay, so if the price of that particular stock is around 251, so the question is how far can you sell options at? And if you start selling options that are very far, in this case I'm just going to point at 260. It doesn't mean 260 is necessarily far, but I am pointing at this one at this moment in time just as a run number right there. And so maybe now you start getting too little premium that makes the trade not to be worth it. Okay, so the problem of using February 7 is that you will get very little premium unless your UFOs happens to be very close. The good news, now that I stated the problem, is that NVIDIA is a $247 stock. And again, I'm not going to use the word expensive because that's a very relative word. Okay, if NVIDIA is going to profit for you, so then it's a cheap stock. So really expensive or cheap, it's very relative. But basically, if we were to compare 247 compared to the other prices that we got on the list, so then yes, we would be able to call NVIDIA one of the higher price point stocks in our list. And therefore, we know that the higher the price the stock, the more the premium you collect when you sell options. And in that sense, we may find success finding enough premium using February 7. Okay, if the stock was, let's say, $50 a share, then basically it would be a wasted time to do the exercise. But if the stock is 200, 150, 250, so then it's worth it a try, because if it works, it could be good. Okay. Now, I do have a concern when I load NVIDIA using regular hours data. It's giving me a performance stat, which is really disappointing, which means that the large institutions in the marketplace, the large market players right now, they have no institutional interest with NVIDIA, at least using regular market hours. So what about pre and post market? With pre and post market, we can see that there is way more institutional interest. Okay, and remember, what we need is at least 48%. That's what we need. We need at least 48% to be able to do a trade. And the other thing that we need is that we need at least 2 UFOs above and 2 UFOs below. And the problem I have is that I do have 2 UFOs below, okay? 1 and 2. I have actually more than 2, but above, okay? Even if I bring the chart down, okay, it's not looking like I got any UFO. And why is that? Well, if we look at the monthly time frame, it seems that we are about to start making all-time high. Last time this happened was on the 18th. So let me load data all the way to 18. That was like February 18. So back to the 55-minute time frame. Let's load data starting February 18. Okay, and let's see what's going to happen. So we got PD on the upper left. Okay, so more data is being downloaded. So hopefully we may have another UFO show up somewhere in here. And if that's the case, that's gonna make me certainly very happy, because then I will have a market condition that meets the rules. And if that's the case, then that opens the door for me to trade. If not, it's okay. We'll go for the next symbol in the list. And here we go. We do have multiple UFOs show up at these upper price points. Okay, and also we got better stats, which is nice. But by the way, this tells you that last year there was more institutional interest because the stats have been diminished from 53 to 49. 49 is still okay. Remember, for non-directional trades, we need a minimum of 48. Okay, so certainly 49 is fine. Okay, so we have multiple UFOs there. If I was to pick two above, two below, so you can see the purple lines I'm drawing. Okay, but in any case, before I get too deep into doing too many calculations, okay, so I'm curious to see if I sell the 263, 264. Let's see how much I get paid. And by the way, I'm not sure I'm going to have the 263, 264 available. I may have the 262.5. I may have the 265. When stocks are of a higher price point, often what happens is that the options available don't come, every dollar. The strike price increments happens to be separated by $2 and a half, $5 at times, sometimes $10. So I'm looking at February 7. Yes, and here we go. You can see here $2 and a half, right? So I would need to be using 265 in this case. And if I was to use the 65, so right now it's clearly looking like I will not be paid enough. Now, I'm not going to give up on that at all. Actually, we may have a trade here, because remember, this is the value of the option now, but the market is going to open. If I go back to TradeStation chart, the market, NVIDIA, is going to open $1.75 higher, and that's going to impact the price of the calls, and therefore the 265 may be selling at a higher value. Okay, so here's the only thing I'm going to do up to this point, and I'm going to leave this trade for later, for when the market opens, so we can properly analyze the trade. Let me get back to my OptionStation Pro. I'm just going to right click to analyze, sell, and insert an iron condor. And the reason why I'm going to do that is so I have the opportunity to input -1 standard deviation, +1 standard deviation. Okay, so this is going to tell me, based on stats and based the current price, which is 251, how far the price is likely to go, which is 260 and 242. So 260 and 242, it's looking nice. It's looking good for me, because if I sell the 265s, okay, up here, or even the 263, well, there is no 263, but maybe I'm going to use that one. So certainly I am selling options that are beyond 260, which is what statistics suggest that begins being a price point which is unlikely to be reachable. Of course, this is just statistics, and anything could change in an instant. Welcome to the markets. But at the same time, statistics certainly are a very good, and most importantly, apart from good, objective reference point that allows you to be mechanical in your planning. Okay, so bottom part 242. So certainly 242, we could use that second green UFO at 239, and 239 again, it's beyond 232. So we may have a market setup, okay, which allows for the trade to work. 239, let's see how much we get paid for, let's say 240 or something like that. So yeah, so 102.68 cents. So my friends, we may have a trade here as the market opens. I'm just gonna go ahead and make a note to, right after the market opens, come back and take a look at NVIDIA. And if you like non-directional trades and you like them to be of a very, very, very short duration with a very high a very high theta, then you may enjoy this one later on. Okay, so we're gonna park NVIDIA. I'm just gonna leave my purple lines on the screen in order to not to overload my TradeStation. I'm gonna go back to my normal bars back of 1,500. Okay. So my UFOs above disappeared, but it doesn't matter if they disappeared. I know I got UFOs there, and I will leave the purple lines as a reminder of that. So when we come back to this chart after the market opens, please remember this yourself, okay? Let me see questions, comments here. Dirk, how are you, my friend? Nice to have you join us. Very nice. Okay, cool. Let's continue. Okay, let's continue. So again, sorting the price point of these stocks from top to bottom, DIA is an ETF, as I said, we're gonna pass. NVIDIA, we just checked. JP Morgan, let me take a look at what happens with JP Morgan. And by the way, when we say take a look, it also means let's load JP Morgan. Okay, JP Morgan seems to have had earnings. That was in January. Okay, that was in January. Again, double check JPM. So if that's the case, that earnings were on January, so then we should have nothing until April. Okay, got it. Perfect. So nothing in front of us that could be a distortion for that particular chart, that particular stock. 52% are the stats we get with pre and post market. Regular session is giving us 46%. That is not enough. It's a shame because here the setup is very nice with multiple UFOs. But remember, those UFOs are less reliable because they were created during market hours, and this statistic performance, it's revealing something that they don't tell us on TV, isn't it? Which is that the institutional interest is not placed in JP Morgan during market hours, but either before or after. Okay, so in other words, I'm gonna have to deal with pre and post market data. And again, I got a similar setup with only one UFO. So I want to look at the monthly time frame, and in this case, it's going to be a tough one because JP Morgan is indeed making all-time high or about to make all-time high again, and therefore, there's no way I can find more UFOs on the chart, and one UFO is not enough. Plus, this market is going to open 1.39% above, so meaning that it's going to be trading already above the UFO, and probably it's going to be some sort of a gap and run or something like that. Okay, so we're going to pass on JP Morgan because again, for a pure non-directional trade, which is what we're doing, we need one more time at least two UFOs above and below, two red, two green. That's the minimum. So we move to Expedia, and we're going to see what's going on with Expedia. And the first thing to check would be earnings. So Expedia. Okay, very good, Expedia. So we get Expedia with earnings on February 14. That's going to make it tricky. Okay, same situation as NVIDIA. So Expedia and NVIDIA are, let's see how romantic they are. They are both very romantic stocks. Okay, they are both very, what a bad joke, by the way. Yeah, they are both stocks reporting earnings on the Valentine's Day, and therefore, again, we need to deal with February 7. Okay, again, good news. $100 plus dollars per share, and UFOs close by may do it. Okay, but if we do have UFOs that are red close by, unfortunately, the second green UFO, it's quite far away from the current price, at least using pre and post market data, which, by the way, pre and post market data is giving us 49%. So I want to check changing session to regular session to see what the stats are, and the stats are better. But now, we got only one UFO above and only one green UFO below. So let me see if we can fix this problem. Let me see. Sometimes it's possible, sometimes it's not. So I'm just going to draw a line at the top of this UFO and a line at the bottom of that UFO. Okay, very mechanical, very clear. And then knowing that those are the UFOs I have, using a regular session with 49%, I'm going to switch to pre-post market, which is also 49%. And unfortunately, the UFOs I got from regular session are the same UFOs I got from pre-post market. In other words, I was, hoping to do something like that. Okay, maybe in here there was another. Sorry for that. Somewhere in here, maybe there was another UFO. Okay, so maybe somewhere here there is another UFO, and then I was planning, okay, so let's use this as a bottom part of the range, and I will use this as a top part of the range, and now I would have two above, two below, where two are regular session UFOs and the other two are pre-post market. That would be okay, but in this case it doesn't work because those UFOs are all lining up at the same price point. Okay, so no valid. So then we continue going down the list. IWR, no good. IWR, it's no good. It's an ETF. And the reason why I'm going to skip the ETFs such as IWR or XLI is because normally they provide less premium. That is what normally happens with ETFs. They provide less premium because they are a safer instrument, so options are cheaper. Okay, and in this case, we want to sell options, so we don't want them to be cheap. We want them to be expensive. AIG, by the way, providing 46% would not work at all. We need a minimum 48. Regular session is giving us 54%. That is good. Okay, so satisfied with that one. So let's check earnings for AIG. So no information. Oh, yes, here. Earnings on February 13th. Okay, so forget about it. This is a $50 stock. It's no way we're going to get premium enough to justify a trade given the fact that the stock is a lower price point stock. Okay, and you can do it yourself, and you will see. When I make a comment like this, normally this is coming from experience. So normally I'm kind of saving a little bit of time out of my experience. I could be wrong. There are exceptions as well, but in most of the cases, you would confirm that what I said is correct. Okay, so I will leave that for you as a homework if you want to check. Okay, so MedLife. Okay, so let's take a look at MedLife. So what do we have with MET? So MedLife reporting earnings on February 6th. Okay, so yeah, we're not gonna do this. Okay, February 6th, it's not possible for us, and therefore, out of this list, really the only stock that we may end up finding an opportunity with it's going to be Nvidia, which 5 minutes from now I'm gonna go back to it and look to plan a trade on it. That'd be great. A very short-term, non-directional trade with only 3 days to expiration. Okay, that would be nice. And it's not looking like it may be crazy not happening. It's actually looking like it may be happening. So be ready to be fast and be ready to trigger that trade in your account if you like the setup I put in place. Paper money, real money, whatever your choices are. Okay. I want to get a sip of water if you don't mind. Thank you very much. Okay, so while we wait for those 4 minutes before the market opens, quick look at directional long and short. Okay, notice that we have 5 shorting opportunities, 5 long opportunities. Okay, so let's begin with Colgate Palmolive. So let's see what we've got here. Okay, so Colgate Palmolive is now in the beginning stages of a new up climate. 2 candles. When the market opens, it's going to be candle number 3, of course. 3 candles out of climates that should be 5. Okay, so certainly valid time to enter Colgate Palmolive. We need, in order to be able to do that, we need statistics above 50%. Okay, for the non-directional trade, we are okay with 48. This is where we draw the line. Okay, and if some of you were to draw the line at 49, 47, it's not like that would be a crazy thing, but that's where I draw the line in the sessions. Okay, so 54 certainly is above that, so that's nice to see. What about pre and post market? Pre and post market is 49, so 49 is below 50, so we will not make an exception. That would be breaking the rules. We don't break the rules. And now that we got this all set up for us, and we can see the stats with regular session data, now I'm looking at the average 72.28. Okay, that's going to be our average price when the moment the market opens, especially given the fact that the stock is going to open up. This average 72.28, maybe 72.5, something like that. So 72.5, unfortunately, happens to be there in the middle of nowhere. Okay, so we need a UFO here, and there is none. In other words, no trade with Colgate Palmolive. Maybe another day. Okay, but not today. Is not meeting the rules. Okay, 2 days from now, the average instead of 72.5, maybe 73 point something, and guess what? Now you have a UFO. Okay, but today it's not the case. Okay, and we certainly want to rely on direct forces as well as indirect forces for our trades. And in this case, the EMA is an indirect force. We don't want to miss it, because if you miss it, you reduce your probabilities, and we are not in the business of doing that. Okay, so looking at IBM, climate wise, IBM is in a new climate, 2 candles into the climate, so today will be candle number 3. Up climates on IBM should be 6 candle long. Okay, so the duration should be 6 candles, 6 days. So that's certainly a valid one, but probability wise, regular session only gives us 48%. That would be okay for non-directional, not for directional. And pre and post market, that one is good, 51.62. That is a nice one. And therefore, the question is, do we have anything around 142.6, 143, and 142.6, 143? Yeah, almost. Again, maybe tomorrow you have an opportunity to use this UFO for an entry, but at this moment in time, it's looking like we are not going to have a confluence with the UFOs and the average. We need the EMA to be enveloped by the average. Okay, so the next one here in the list is Intel. Okay, but again, we are just a few seconds away. That's it. The market just opened. Okay, the market just read my mind. So very quickly, I'm just gonna go back to non-directional, click on NVIDIA, reassess the trade. Let's see if it makes sense or it doesn't. And if it doesn't, it's fine. But if it does, we're gonna execute this trade right now. Okay. So remember, my concern was the 265, and here we go. Yes, it's looking good. So we got 32 cents. Of course, the minimum is 35. That's the minimum we want, isn't it? Our rules suggest minimum 35 cents. You would say, hey, Jose, wait a minute, 32 is less. You're right. Well, let the market stabilize itself. You will see less spread and you will see more premium. But on top of that, if you look at the other side, that we're going to shoot for 242 or something like that, notice that we have over 35. And, we may be in a position where the trade works. Okay. We may be in a position where the trade works. So again, let's go back to our analysis tab and let's run the process properly in order to see if this trade in the end will be valid or will not. So I'm just getting this down somewhere here in the middle of the range. Okay, remember the goal is to plan a trade where in a perfect world we are from the current price to the bottom part, and when you compare that with the upper part, okay, so in a perfect world we are more or less equal distance, okay, and it is indeed looking like we are more or less equal distance, okay. So what are we gonna do? Okay, well, we're gonna set a range from 265 to 239 and bet on the fact that Nvidia is gonna stay in that range for 3 days, which based on stats is likely, okay, because stats suggest, let me show you one more time, stats suggest that this stock should remain between 259 and 243, which is certainly a narrower range compared to 265 on the top and 239 in the bottom. Okay, so probabilities in our favor. Let's go ahead and input the parameters for the iron condor. So we're gonna be buying a call. I am anticipating it's gonna be the 267.5 call. 267.5 call. Plus is for buy. We're gonna sell a call. We're gonna sell the 265 call. That's what we said, and I guess it's obvious why 265, isn't it? We're gonna be using February 7 expiration date, okay, because earnings are on February 14, okay, so that's why we're gonna use that date. And then on the bottom part, we're gonna be selling, let's call it the 240, okay, the 240 put, okay, and then we're gonna be buying something below 237.5 put, okay. And right now I'm noticing, I think I made a mistake when I was consulting the option chain. I think I checked the 242.5. What I need is a 240 because we need something, we need the closest number to 240 to 239, and that's 240 on the option chain. Okay, so let me check because I'm a little concerned there. 240, oh yes, we get paid 38, okay, that's fine. And 265, yeah, 221. So premiums are dropping very, very quickly, very, very quickly. Everybody's so relaxed. Okay, everybody's so relaxed. The market is gapping up today, and everybody's like, "That's it, no danger anymore." So what's happening to the VIX? What's happening to the VIX? The VIX earlier was -2 something. Now it's -4 something. All the options across the board are becoming cheaper, and this basically kind of caught us while we were planning the trade, isn't it? So yeah, so maybe a tough one to make work. Okay, maybe a tough one to make work if we need to use the 240. Okay, and by the way, I think we need to use the 240. Let me switch to pre-post market. Yeah, we need at least two UFOs. Okay, we need at least two UFOs, and the second UFO is right there at 239. Okay, so we have to use the 230s, and that would pay you 38 cents below. That's certainly acceptable. But then when you look at the 265, and we have to use the 265, then that would pay you 21 cents only. Okay, so my only opportunity here would be, let's see, I'm just gonna check one last time to see if I can make it work. Again, I'm not gonna make up a trade. I'm just looking for alternatives in case that's possible. So yeah, I could maybe use this collection of UFOs, but 255 is not valid because remember, the stats are telling me minimum 259. So I cannot use 255, then I would be breaking the rules. Yeah, sure, if I sell it to 255, I'm gonna get plenty of premium, but I would also be breaking the rules, okay? So basically, sad story on the end here with NVIDIA, in the sense that we are not gonna validate this trade. We've been very, very close, okay, very, very close. And by the way, keep those lines in mind, okay, 265, 240, because if NVIDIA started, kind of like falling, something like that, and everybody was to get agitated one more time. So next thing you know, we will find premium again. Okay, but again, it better happen soon, because if this is going to happen towards the end of the day, of course, the less the time to expiration, the less the premium. And we only got 3 days to Friday. If that happens late in the afternoon today, New York time, so then instead of 3 days to expiration, basically it's 2 days, and then again, it's no way it's going to work. Okay, good. Okay, so no issues, and I'm gonna rerun the scan just in case a new opportunity arises. Okay, remember, the new opportunities will show in blue color, so we'll check that later. And let's continue where we left with our directional trades, if that's okay. Everybody could please confirm that you are following me, because since we started the session, you've been quite quiet, which I love it. If that means that you guys are following at the same time, too quiet also makes me feel that maybe I'm just moving a little too fast, and you guys are paying so close attention that you are a little bit overwhelmed actually, instead of being helped. So please confirm for me if everything is okay. And if you are just busy following, but you are indeed following, then it's all good. But if it's not good, make sure you let me know. Okay. Ruben, Jose, JP Morgan might be okay for Iron Condor. Okay, but I don't have it in the list as of now, Ruben, meaning that the scanner didn't pick it up as a high premium stock. So I am rerunning the scan after I'm done with the directional trades. If the scan is giving me JP Morgan, then certainly I'll be happy to go for it. Okay, but remember, the requirements we have for non-directional trading are not only the UFO requirements. For sure, those are the most important, but we also have premium requirements. We want to get paid generously from the markets, and this means collecting a high level of premiums. Okay, cool. Okay, so let's continue. The next one to check, I believe, would be IBM. Intel. Okay, Intel, IBM, we already did. Intel is giving us 48%. That is not acceptable. No institutional interest. Not enough, I should say. Of course, there is institutional interest, but not enough institutional interest in a regular session. What about pre-post market? So pre-post market reveals the real action of those larger market players, isn't it? They act more intensively pre and post market. So 54% is certainly valid. And what's very nice about Intel is that we just started with a brand new climate. Okay, we just started, just right now. Okay, this climate is supposed to last 6 candles. Okay, so if Nvidia was to, Intel was to drop to this UFO and we take the trade, you may ride a very nice move for multiple days. Especially, the statistics we have here, as you know, they are stats and therefore they are realistic, but at the same time, they are a 1 standard deviation, meaning that many times stocks will propagate their climate longer than that, isn't it? In other words, you may be in a trade for over 6 days, not only 6 days, but more than that. Okay, so we are happy with that. Okay, now the question is, what about that UFO? Okay, that UFO has a ending point at 65.25, where the EMA is 65.08. Okay, so if I draw the line at 65.08, so 65.08 is more or less here. Okay, in other words, right below the UFO. Okay, now in this case, and you have heard me say that millions of times. Okay, you have heard me say that millions of times. Stocks are fragile. And I don't mean that trading stocks is wrong. What I mean is that stocks are an instrument that is impacted by many, many things. It's not like stocks got life on their own. Stocks depend on the sector. Stocks depend on other competitor stocks. Stocks depend on the overall broad market, the S&P, and so on. And therefore, they are fragile. If the S&P was to move up, maybe that stock is not even a good product, but it goes up too. Why? Because the overall market is basically acting as a magnet, and vice versa. So, long story short, the reason why I'm rephrasing this comment, which I made a million times, it's because we don't need to be too precise with the EMA and the UFOs. And therefore, I'm going to call this location for that UFO, I'm going to call it valid, given where the EMA is as we speak. Okay? So, time to plan the trade. And our process has us first do everything we have to do with the common time frame, which is the daily time frame. Okay, common time frame is the daily time frame. So what are we gonna do? First, check the climate. We discuss it. Candle number 1 out of 6. Fantastic. What is the second step? Target. So let's go ahead and turn on AutoUFOs on the daily time frame to analyze and figure out where the target would be. Now, notice how right now we don't see any red UFO. Why is that? Let's move to the monthly time frame, and very, very good news. Intel, it's basically making all times high. And you would say, from an English language point of view, you would say all times high is high, and I don't want to buy high. And certainly it makes a lot of sense. But on the other hand, all time highs also means that there is no traces of selling, because if that was the case, it would not be all times high. Therefore, potentially, that climate got plenty of room to keep expanding until sellers show up and they start taking profits or whatever that is. In other words, we have seen in the past, okay, and many of you have enjoyed and benefited from those trades. We've seen fantastic trades that we executed together, here in the sessions, where we took advantage of all times high in the market, okay? And this is not going to be an exception. Now, this trade, in other words, summary of a summary, this trade is a trade to be executed with no target. Why with no target? Well, because there is no red UFO on the common time frame, so no target. And therefore, the way to deal with the trade is just trail stop, trail stop, trail stop, follow price, follow price, follow price, okay? So we're going to do that, okay? So the plan, first, the climate, we did. Second, the target, I just said. Third, the target, third, the entry, I just commented. We're going to use this green UFO given the location of the EMA. So we got the climate, the target, the entry, stop. We're not going to use stops, isn't it? Because we're going to be using options. We're going to be buying calls. And what happens when you buy calls? Okay, well, when you buy calls, for the ones of you not trading options, okay, when you buy calls, the most you can lose is the amount of money paid for such calls you bought, right? So if you want to risk $500, just buy calls up to $500. If you want to risk $100, just buy calls up to $100. And what's the beauty of not using stops? Well, the beauty of not using stops, while we maintain control over risk, because the most you can lose is what you pay for the calls, okay? I'm not saying spend all your money on calls, okay? You need to define how much you want to risk. Typical rule is maximum 2% of your account, isn't it? So let's say you want to risk $100, so then you buy calls up to $100. And now you know the most you can lose is 100. But what's the beauty now? The beauty is that if price comes to this UFO, and instead of bouncing back up, okay, those on field orders are canceled. Remember, stocks are fragile. and it goes back down to the next UFO, if you were to use stops, you would be stopped out and you would have taken a loss, which is not a big deal. And you could certainly do that, and it's not wrong. Okay. But the beauty is that because you are using calls and the most you can lose is what you pay for the calls, you don't need to close the trade. You still got time until the expiration. And guess what? The moment the stock comes here, it may bounce and then start and begin its process all the way to the target. Okay. Or like it happened, in the prior 2 days where it was like, the world is ending. That's what happened in the overall market, right? And now what? Now it's coming back up, right? So again, you have more flexibility with being imprecise with your timing decisions, even though the goal is to be precise. That's why we use AutoUFOs, okay? But at the same time, stocks are fragile. So one way to overcome the fact that they are fragile, and we are going to have issues and challenges to be precise. It's not like futures or Forex, okay? We're going to overcome that thanks to options. Okay, many of you have enjoyed trades of this sort in the past, and you know exactly what I'm talking about. But I'm kind of summarizing what I'm about to do for the ones of you that don't trade options yet, or were not familiar with what I just said. Okay, so I'm loading Intel. Okay, I am loading Intel options in the option chain. We're going to be able to see all the options available. Please don't be overwhelmed if you've never seen that before. Options give you options, therefore there are many options, but we only need to pick one. Okay, we only need to pick one. And how are we going to pick that one? Well, normally we calculate something called the time to target, isn't it? That's what we normally do. We calculate time to target. But what's the issue here? Well, the issue here is that we cannot calculate time to target because there is no target. Therefore, we need to use the next earning date, which is April 24. You guys see that? April 24. The next earning date, it's the information that we're going to be utilizing when it comes to using an expiration date that gives us time. 24 of April, okay, the closest it can get is April 17, okay? And why are we doing that? Because again, the expiration date that will grow the most as earnings approaches is April 17. And we want that because as time passes, what's going to happen too is that the options will lose value at the rate of theta, time decay, right? So to kind of overcome that problem, we're going to use this option, which has 72 days to go, because if the trade was to last for a long time, then we will lose a lot of time value, but we will also enjoy a lot of increase in premium, given the fact that this is the expiration date lining up with earnings, okay? And if the trade was to last very little because you get to your targets or you start trailing stop, in this case, there are no target, and you start trailing stop, and you get stopped out soon, well, then if you get stopped out soon, you got little time decay lost. Is that making sense? So therefore, we're just going to go for April 17 in that case. Okay, so I'm just going to click on any option to analyze and buy a single call. Normally we do verticals, isn't it? Verticals that we call bull call spreads or debit spreads. It's the name of this type of option strategy, the family name, right? So, but in this case, we're just going to go with a single call, a long call, naked call long. And the reason why we're going to do that is because, I would not know where to sell the second option I would use if I do a vertical. In a vertical spread, most of you should know, and if you don't, make sure you watch the YouTube recordings, okay? But most of you should know that in a vertical spread, you buy an option and you sell an option. And the option that we sell, we have a rule, which is to sell it beyond the target location. Okay, beyond the target location. And in this case, there is no target. So I don't know what's that location. Therefore, I'm just going to go for a single call, and that's going to be my approach. Okay, so I need basically, I only need one value here in my slices, which is my entry point. Okay, so the entry point is going to be the top part of the UFO, which is 65.75, as you can see right here. Okay, that's the one. So 65.75. I'm gonna input that value here, and I added perfectly done 17 April expiration by one call. All of this is perfectly done. What I don't know yet is, am I going to use the 65? That I don't know yet. And that depends on what? That depends on my deltas. Okay? That depends on my deltas. So how many deltas I want? I want around 30 deltas. Okay? And at my entry point, okay, at my entry point, this option provides me with 57, which is too much. So I'm gonna have to raise it, okay? And the next one is gonna be 67 and a half. So let's see, 67 and a half is giving me 42, okay? And still more than what I need. I'm concerned 70 may give me too little. Yeah, 70 is giving me 27. So, it's okay. Let's be a little generous here. Sure, it is that the 70 cost you $101. Okay, the value is $101 is cheaper. The 67 and a half is going to cost you more. It's going to cost you 184, but it also gives you more delta. Okay, so it's okay. Okay, so let's say you're going to take this trade, and let's say you tell me, Jose, based on my risk management rules, I am willing to risk $200 per trade. So know that each call will cost you 185. This is the estimation. So if you want to risk 200, then you can afford to buy one. Let's say you tell me, Jose, I'm okay risking 400. Then based on that estimation, then you would buy two calls instead of one. Quantity, you would make it two, and then you would have 2 times $185 of risk. Let's say you tell me, Jose, in my risk plan, I want to risk $50 per trade. Well, guess what? That option is too expensive, so you cannot do the trade. It doesn't fit your rules. Okay. Let's assume this trade works with you. So let's place an order. So I'm just gonna click on the 3 dots on the right, click on trade. The moment I click on trade, I got my order placement tool here, and I'm just gonna go for a market order, day only. Okay, day only, market order, day only. So why day only? Because remember, tomorrow the EMA will change, so I need to revalidate the trade is valid. Okay, so I'll make it day only. And of course, I'm not buying the call now because now the stock is trading at 66. I don't want to buy the call now. I want to buy the call only if the stock drops to 65.75. So that in TradeStation is called an activation rule, and based on Intel. Okay, so I'm typing Intel add, and this is going to be less than or equal to 65.75. Okay, which, as you can see, is the price slice that we got right there, which is where the green UFO was on the chart. Okay, so we got it right there as well. Okay, so the moment I click OK, okay, now notice I got a check mark and activation rule. You guys see that? So now if I click place order, I'll have a confirmation window that says, okay, you are about to buy one of the 67.5 calls, okay, at whatever price is available, but only if Intel drops to 65.75 or below. Okay, that's the plan. And I'm gonna click yes, 1, 2, 3, and now the order is in the system, and I can go ahead and monitor that fact using my manage tab, where I can see here on the received. Okay, notice how I have my Intel trade right there, working, waiting to get filled, if only if Intel drops to my entry UFO. Okay, cool. So time for me to double check if there are questions. Time for you to please confirm that the plan is clear, if it's clear, or you have a question if you do, and then that way I'll be able to go for the next trade. Okay, we still got 8 minutes in the session, guys, so please get back to me quickly if that's possible, so I have time to look at another market opportunity. I'd love to do that. Okay. Yeah. JP Morgan, yes, very nice, Ruben. Okay, let's go for it. So JP Morgan, I love the teamwork. So JP Morgan is here. Here we go. Okay, I'm not sure if I skipped this one earlier or it was not, but the fact now is we do have JP Morgan. Okay, and when looking at JP Morgan, we do have 51% stats with pre and post market, regular session. We got multiple UFOs above and below, so all of this is looking good. Now, when it comes to earnings with JP Morgan, JPM, so we are looking at earnings that took place already. That was in January 14, and the next earnings are going to happen on 14th of April. Okay, so you are absolutely right. Ruben, it is indeed looking like we may be able to lean against those UFOs above. We have more than two red, and those UFOs below, we got more than two that are green color. They are 49%. And also, if I was to switch to pre-post market, we also have UFOs at those price points. So really, we have multiple UFOs in multiple places that all meet the 49% rule. So let me go ahead and draw the purple lines. And in this case, the purple lines will represent pre and post market UFOs. And then when I move to regular session, okay, so I will know where that is, okay, and notice that here I got one, and right below I would have number two. So really, technically speaking, that green UFO below is actually UFO number three, okay? It's actually UFO number three in that particular case, okay? And then on the upper part, so the UFO that we got on the pre-post market data is lining up perfectly with that UFO, so it's the same. So then in this case, we will need to shoot for the upper one. So if I was to look at distance, vertical distance from the current price to the upper part of the range, okay, and I was to project that vertical distance to the bottom part, okay, certainly trade number one, I'm going to change colors, okay, just so you understand where I am. Let's make it blue, okay. So trade number one would be a range between the two lines in blue color, okay. Now trade number two, I'm wondering, I'm actually kind of positive that if I was to shoot and measure the distance from current price to the very bottom UFO, and I was to project this to the upside, okay, I am not exactly in the middle part of the range, not exactly, okay, not exactly, but I would say it may not be crazy to use this upper third red UFO to defend myself. And therefore, I could have potentially two trades here. One, which is a range from 141 to 131, and another one, which is a range between 140 to 133. Okay. Now, all of this will depend on statistics, expiration dates, premium collected, etc., etc. So what do? We don't think about it. We don't extract any opinion or anything like that. We just input JPM. We get the shorter expiration date. I will skip 7th of February. I'll go for the next one, February 14. Okay, and without even thinking about it, like I always say, we analyze and sell an iron condor. So here is on the screen, we add our +1 standard deviation, we add our -1 standard deviation, and this is bringing us to 141, 132. So 141, certainly we cannot use 140. Okay, we cannot use 140. 141 is fine, and therefore leaning against 131.47 below, it's also fine because stats suggest 132 is the statistical range. Okay, so out of curiosity, just because I'm curious and because I got a blue line right there at 140, and because JP Morgan is a stock which has a price value which is not low, I want to look at the 140, okay, and the 140 using February 7 pays only 9 cents, so that's not enough, okay. So we cannot use February 7, that is confirmed, and if we use February 14, then we have to use at least 141, 132, which is 141, isn't it? Given the location of the UFOs, okay. So the question is, okay, what if I sell 141 calls using February 14? So the 141 calls are paying us 29. The minimum we are shooting for is 35, isn't it? So that's less. Again, we do have an exception rule, which is, okay, we can take up to 25, but only if the other side is paying us generously, okay? And the question is how much the other side is paying us. Well, the other side is paying us 36, okay, 36. So 36, I mean, if you think about the 35, which is our minimum, okay? So 35 times 2, that's 70. So if I was to take 36 and I was to add up 28, I mean, I don't think I need to use a calculator to do that, okay? I think we all see it, that unfortunately 36 plus 28, I said, right? Yeah, that is 64, which is less premium than the 70 cents we want to collect from the short units, okay? And unfortunately, You see, it's funny because normally we love stocks that are liquid. Okay, notice, we got 28, 29 is so liquid, it's very nice. So we love stocks that are very liquid, but in this case, notice I said unfortunately, because what I was going to say is that if that stock was illiquid, or let's say less liquid, okay, and then you had a wider spread, sometimes you can bid. Let me rephrase that. You can ask a greater amount of premium when you place your sell order. And sometimes market makers are really eager to take the other side, and you'll get your fill. And now you got 70, even though you would have never thought you would get 70 because of that 28. But in this case, the options are so liquid, you only got 1 cent difference. So best case ever, 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 and it's not going to happen, is that you would get 1 cent additional for each of the options. So that would be 2 cents, and 2 cents would bring 64 up to 66, which is still less than 70. And therefore, I am not here to teach you how to break the rules, because I don't, and therefore you should not either. We are here to be professional and disciplined, and therefore we are gonna invalidate this trade. Having said that, Ruben, the setup is nice. I'm happy you brought this into the conversation. I love the teamwork, as I always say, so love that. And what I want to say is that, remember, today we got a 4% drop on the VIX. Everything got very cooled down. Guess what? If there was to be a little bit of a correction in the market, everything may spice up. And if you look at this again later or tomorrow, you may get your 70 cents, because in this case, you still got 9 days to expiration. Okay, it's not like the other case where I said no way it's going to work this afternoon because it's only 2 days. In this case, we are looking at 9 days to expiration, and in that sense, you may find your 70 cents later in the day or maybe tomorrow. So keep those lines on your chart. Okay, keep those lines on your chart. I'll flash it again. We're talking about 141.14 all the way to 133.04, and you may have a trade, a valid one, that presents itself a little later. Having said all of this, I believe that we just reached the top of the hour, and it's time to conclude the session. Ruben, being right in the middle of the Aran counter is to get delta neutral? No, really, the delta doesn't really matter. What matters is that you got UFOs to defend your delta. But being in the middle of the range, or as close as possible to the middle, what's going to do for you is that basically, at least from a theoretical point of view, you are the furthest away as possible from being proven wrong in both of the sides of the range. And therefore, for you to be proven wrong, you need the greatest amount of time to pass for price to travel and prove you wrong. Does that make sense? And the beauty of time passing is time decay. So if you were to start close to the upper side of the range, you still got the UFOs to defend yourself, etc. But remember, if a new climate develops and on-field orders are canceled, then distance-wise, in this case, is one of those exceptions where I ask you, forget about the UFOs. Okay, you should never do that. But in this case, is when I make that statement, because when a climate develops itself, on-field orders are always canceled, isn't it? So then you cannot rely on those UFOs. So then what would happen in that case is that you would have accumulated very little time decay in order for you to be proven wrong. And then remember, we talked about variations of the strategy where you take an iron condor and you butterfly it, and we talk about some actions, some damage control in prior sessions. So then you cannot really do much of it because you never got to accumulate enough time decay. So starting in the middle gives you that statistical, theoretical, ideal point where you are far from everywhere. And therefore, if you are going to be proven wrong, you're going to be able to catch most of the time decay possible in that scenario. Okay. Again, in the theory world, sometimes you have a crazy move and in one day you are proven wrong. We've seen that happen too, isn't it? I mean, that's the markets, my friends. They are dynamic. But again, starting with a good statistical, your trades with a good statistical approach and plan and analysis, will put you at an advantage, especially after a collection of trades. You do this type of approach in your trading 3 times and it means nothing, but you do it 100 times, you do it 100 trades, you do it over a year, and then you realize, oh wow, now I've got consistent. Okay, why? Because stats, matter. Okay. Anyway, everybody, super pleasure. See you. It's gonna be next week, if I'm not mistaken. We'll see you again for the short-term sessions. In the meantime, any questions you may have, feel free to shoot emails. Uh, Not sure if it's needed for me to write it down, but just in case, tradewithufos.com. Okay, and I never asked for it. Okay, but what about you guys give a thumbs up if you enjoy the session, and you like, you subscribe, and you click on the notification bell of the YouTube channel. And by the way, as well, I commented this yesterday, so I'll comment it to you as well, because not everybody was here today. Yesterday, some of you, some of the traders yesterday were intraday traders only. Today, some of you are long-term traders only. Okay, so you may not know what I'm about to say, but one dear member of our community, and he's with us today, Bojan, has done an incredible job producing a beautiful, beautiful course that I recommend everybody to watch. This course is in udemy.com. Okay, so if you were to get in the website called udemy.com and you were to type trading simplified, okay, the moment you type trading simplified in udemy.com, you'll be able to access Bojan course, and you can enroll in it if you feel it's worth it. But certainly, wow, it's key messages, key tips. I really, really enjoy it. And Bojan, hopefully you are not blushing by my comments. And by the way, I'm not saying that because you're here, but you've done a great job, my friend, and I'm very proud of that. And I know it could benefit anyone, and hence I'm mentioning it here in case you guys wanna watch it. Okay. Anyway, having said all of that, yes, of course, Bojan, and you deserve it. You deserve it. Okay, and anyone who watches the course will be able to, to agree on that. I'm very positive. That's why I'm also recommending it. Okay, I have zero effort and problems to do that. Okay, it's actually a pleasure. Anyway, you guys, everybody, take care. Super pleasure to be your guide in the session today, as always, and keep up the good work out there. Yeah, the market is bouncing. There are opportunities. Let's catch them. Take care, everybody. Bye bye.